No, banks, they will get their money back. They won't give you money if they can't get it from you. If a bank is giving you money because it knows that you're going to get banks, before they give you money, they consider if you are high,
not everyone
high risk or low risk. If you are low risk, they give you cash. If you are high risk, they don't even deal with you.
Not everyone has credit card.
Debit card.
Really?
Nobody has. You have a credit card because you are credit worthy. It's not a debit card. The debit card is the one you spend from your card, from your account. But a credit card is given to you because the bank trusts you to spend the money that does not belong to you, but you're going to return it. What?
No risk.
A credit card. Yeah, maybe it's a wealthy man. Do you understand? But before the bank will give you a credit facility, the bank trusts that you're going to pay back. Banks don't lose money like that. And in economics, we used to say banks are too big to fail.
So we need to pay them.
Yeah. But that is aside. Now let's put that aside now. So the point I'm talking about here is that for control accounts, it's all about finding both credit sales and credit purchase. Because there's error now. Your book is not balancing with your book balance is not the same as your cash balance. That means there's a mistake. We check if the mistake is from our suppliers or it's from our customers. Do you understand the second point here now? Do you understand the second point or not?
Yes.
The third one, to find the amount owned and owed. The amount owned and owed. What's the difference between owned and owed?
Own when you own it and owed when you
When you own
have
it
to
to
give
people.
Owed.
Owned when you own the money and
Owed when you
have
own
to
it.
So this is for your debtors and this is your creditors.
Yeah.
So you want to know the amount your debtors are owing you and the amount you are owing to your suppliers, credit suppliers. Do you understand this?
Yeah.
Any question up to now? Don't try when I'm talking. Don't. Now, what are the advantages of using control account? Number one, it helps to check the accuracy of the ledger. Like I told you earlier, our books must balance. The debit side and the credit side, we must have our book balance with their cash balance must be equal. So if they are not equal, that means they are not accurate. They are not accurate. That's inaccurate. It simply means we use the control account to find accuracy. The second one, they help in detecting errors easily. With control account, because it's linked to both your supplier and your customer, you can easily find errors. The third one, the amount owned and owed can be ascertained and balanced quickly. So if you are owing, you know, oh, you have to pay this. If they are owing you, yes, I need to trace my customers, the credit customers, and get my money from them, then account balances. Then what are the problems? The first one, although they detect errors, but they don't identify the ledger account which contains the error. So here, we detect errors, yes, but we might not be able to say which customer is owing us or which supplier we are owing because it's a ledger. So we don't have details. We only have figures that are missing. So it might detect the error, but it will not help us to trace where the error comes from.
How to find
The person, the individual in the ledger. Do you get it? Because it's a general ledger.
yes.
Two, some errors cannot be reviewed. Yes, error of omission, error of original entries. These errors, error of omission, you did not even record your transaction. Because most of the time, we have problems with control, we have imbalances in our account because of incomplete records. Now when we talk about incomplete records, we're simply talking about we not using the double entry. So the errors we make are because, oh, we debited, we forgot to credit. Or we credit, we forgot to debit. So this makes it incomplete. So we might not be able to detect. Some errors might not be able to be known, like errors of omission. You did not even record the transaction at all. Because you don't record the transaction, it's not going to be in your transaction. It's not going to be in your account. You omitted it. Do you understand what error of omission is? Error of omission means you did not record the transaction between you and the customer or you and the supplier. You did not have the record at all. So because you don't have the record, you won't know it's an error. Do you get the point?
Yeah.
Error of original entry. The mistake you make at the beginning. You are supposed to record 10,000. You recorded 1,000. It will be assumed that it is 1,000. You're not going to detect it. Error of original entry. Do you get it here? Please close that door. For error of original entry, it's simply talking about the error you make at the initial stage of your transaction. The error you make at the initial stage of your transaction, nobody knows about it. If you record it for 10,000, it is 10,000. If you record it for 500, it's going to be 500. So you're making mistake from the beginning, and because you've made mistake from the beginning, it ends with a mistake. So it might be difficult to to detect.
The whole thing.
Yeah, that's why when you prepare accounts, you don't make mistakes. You get it right the first time. Get it right the first time. That's accounting. Because the error you make at the beginning makes everything unbalanced. Do we understand that? So what are the types of control account we have? We have sales ledger control account and purchases ledger control account. The first one is purchases ledger control account, sales ledger control account, which is debtors control account. We call it debtors control account or sales ledger control account. We call it debtors ledger control account or what? Sales ledger control account. These are for our credit customers. All the transactions from our debtors, our credit customers are recorded in the sales ledger control account or debtors control account. Do we understand that? What? Sales ledger control account, debtors control account is the same. So it is an account in the general ledger which shows the total of all transactions with debtors. Who are your debtors? Your credit customers. Those that purchase from you on credit, that you sold to on credit. It consists of credit sales totals and total amount received from debtors. The total amount of money you receive from the debtors and the total value of your invoice. You usually have a debit balance, but you also have a credit balance. It's always going to be on the debit side. So the debit side must be greater than the credit side. You balance it up on the credit side. That is what it means. You balance it up on the credit side. So your balance carried down will always be where? On the credit side. Do you understand this? For creditors control account, it's the same as purchases control account. Purchases ledger control account. It is an account in the general ledger that shows the total amount of transactions done by the creditor to the creditors. So your credit suppliers, those that you buy from, the total amount of money you pay to them and the total amount of money you are owing them will be recorded in your creditors control account or purchases control account. Do we get it? Do you get it or not, please? It usually have a credit balance, but also have a debit balance. So on this side, your balance carried down will be on the debit side. Your balance carried down will be where? On the debit side. Your balance carried down here will be on the credit side. Are you getting the difference between them here? Here, we said you usually have a debit balance, which means your balance CD, your balance carried down will be on the credit side. Here, you usually have a credit balance, which simply means your balance CD will be on the debit side. Do we get that, please? Are you guys with me? It is prepared for information found in purchases and sales. So the same information here, but on the credit side here, on the debit side here. Any question up to now? So I'm going to show you the format of preparing a sales ledger and control account.